following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for options, wit, and wisdom, and occasional hilarity. My name is Mark Longo from theoptionsinsider.com, as well as the old Options Insider Radio Network. And I'm joined today on the old all-star panel by a trio of regulars on the Option Block, starting off with Mr. FHM, a.k.a. Federal Holiday Mike, a.k.a. Know Your Options Inc.'s own Mike Cavanaugh. Mr. C, welcome back to the show, sir.
Great to be back. I'm still up on the soapbox from last week's show, and I've got my binoculars out looking for the next Federal Holiday, and it's a ways away, so get used to me being on the Monday show.
Uh-oh, we're stuck with you for the foreseeable future, so listeners, get ready for many more soapboxes to come. All right, and next in line we have Mr. Lobster himself, a.k.a. Mr. Slinky.com, a.k.a. the man from OptionPit.com, a.k.a. one Andrew Giovinazzi. Mr. Giovinazzi, welcome back to the show as well, sir.
Thank you very much. I don't think I have quite the soapbox that Mike has, although we're recovering from the Maine Easter, which, of course, you know, people here are just trying to eat the Easter bunny. So
I've heard that the Maine Easter is nothing but a wild bacchanal that just pales in any way you can possibly describe it. I think the Romans would recoil in shock from the Maine Easter.
Yes, the horror. Yes, I'm doing very well.
No one's ever seen a grown man eat that much lobster and survive.
Buckets of it.
Buckets. And last, but certainly not least, man who is shrugging off the impact of the big Tim Navabi wedding this weekend, one John Grigus from Options Express. Mr. Grigus, welcome back to the show, to you as well, sir.
Hey, good to be here. It's good to see you and your beautiful wife on Saturday. She obviously marries you for your money, not for your looks.
Yes. Face for radio, indeed. A voice for radio as well, so that worked out pretty well.
But it was a good time. We had, about two large tables of everyone in the industry and everyone from Options Express, so...
quite the OX turnout at the event on Saturday night, as all the ladies in our audience will tearfully admit that one Tim Navabi is now off the market, and he's off to Paris, where he is, I'm sure, enjoying a baguette and a nice strong cup of coffee and laughing at us here doing the show.
Yeah, and as much as we tried to the audience out there, he would not Skype in from the Eiffel Tower.
Yes, we tried to get him to Skype in from the Eiffel Tower so we could hear the wind blowing through his hair as he joined on the show, but he decided his wife might frown upon him dialing into the show while on his honeymoon, and probably a wise choice looking at the long-term benefit of that. Got to keep the wife happy.
Especially
Every
on the
time I go to a
honeymoon.
wedding, I'm always reminded, like, oh, those vows. God damn, I gotta start sticking to those vows. There's some important things in there that I don't think I'm really too up to speed on in my daily routine.
Good thing the old wives don't listen to this show. But all right, and with that lovely sentiment from Mr. Grigus to reaffirm his vows, we will close out the old intro segment and dive right into the trading block.
The trading block.
All right, and welcome to the trading block. And unusually for us, or it should be as unusual for us of late, to have something interesting to talk about, but there was actually a wee bit of activity on the old street today. Most of the major indices were down about 1%. The S&P down about 16 handles at 1382. The Dow down about 130 to break through 13,000 again. Almost at 1300. Break through 13,000 again to close at 12,929. The NASDAQ down about 33 handles to 3,047. And yet, despite the fact that everything was down about 1% today, good old Apple up about 0.5%. So I guess that's Apple's version of a down day, only up 0.5% today. They were flirting with over 640 today, and it closed at 636.23. So a wee bit of activity on the old street today. So a nice change of pace. You know, a lot of that down move came from the rather bizarre circumstances we had towards the end of last week, where we had a relatively important number coming out on a day when the markets were closed. You had a little bit of futures activity in the morning that you really could have participated on the non-farms with, but that was really about it. I'm trying to remember. Someone was asking me the other day, when was the last time this happened? I can't remember another time when a major number came out on a day when the holidays were closed. When the markets were closed. Federal holiday, Mike, can you think of any?
Not off the top of my head.
He was on vacation.
Given that you are so familiar with the federal holiday schedule, after all.
You would think maybe we need a new nickname for me, like wannabe federal holiday Mike.
But yeah, it is an interesting scenario where we saw going into the end of last week a very bizarre circumstance where usually market makers and liquidity providers in the options market are the first to hit any bids going into a long weekend to start pricing that weekend in on Wednesday going into Thursday. And we saw people keeping their powder dry going into even the close of Thursday session before a long weekend, which is extremely unusual. I think the bulk of that could be chalked up to the fact that we did have that bizarre circumstance on Friday, and then of course we saw the market reacting to that relatively weak number today with a 1% down move across the board. So good old non-farms apparently can still move markets a bit.
I can throw in a juicy tidbit with holidays, and the reason that options expiration is on the third Friday of the month is because once every 7 years, Good Friday falls on the Friday and they move expiration to Thursday. But that was the least occurring holiday where the market needs to be closed, and that's why they picked the third Friday. So there you go.
That is a juicy tidbit.
And it's the truth.
I've always been more of a fan of the second Tuesday, but no one seems to want to take up that rallying cry.
I like using the word penultimate. The fourth penultimate trading day of the month.
The penultimate Friday of the month.
Penultimate Friday.
It does have that air of gravitas to it, doesn't it? Just something. It sounds much more important than it actually is. But
and now I remember the scenario we saw with the jobs number. The last time I remember something that significant where we had a federal holiday was the Soc Gen unwind, which would have been Martin Luther King, January 25th of 2008. The S&P was down about 40 points on that Monday. And I
think it was like 65 points. I worked that Monday here by myself.
65. Maybe it was 65 points. Yeah, it was a big move.
Yeah, the Dow was down about 500 or 600 points.
Yeah.
Horrible day.
That was one of those, everybody was out. I actually saw the former CEO of Options Express that day at Whole Foods and we were both looking at each other like wondering what was going to happen Tuesday morning. That's my story. That's all I got. Sorry.
Now, Andrew, we obviously saw good old VIX cash ticking up to the upside after everyone pontificating last week that VIX was stuck in this 14 to 17 range. We saw it breaking off to the upside. See, I was teasing you about loading up on all those upside verticals, and you laughed. And yet,
well, the problem is with the VIX, is they'd probably still be down on the day. Yes, I'm of the mind now to sell puts in that thing. Those juicy in the money puts when I'm getting VIXy, but definitely a little move up. I think we also my compadre Mark. There's a little flattening out in the sort of the term structure in the back. I have a feeling that I think again this VIX cash number is hard to maintain with we don't really still have a lot of realized vol, even though we had a couple of just down days lately, but it's definitely creeping back up. And what can you say? The market goes down, the VIX goes up. That's just the rule. What do you get? About 7% in the VIX for a 1% down move. So that's about what we're getting. So it's nothing untoward. It's just the market is she's going down, and now there's a few. Everybody was pretty gaga let's say not last week, but the week before, and it just took the Europeans had to just show up again, and then everybody freaked out. So. There you go.
Everybody came back from the long weekend and just decided it was time to scoop some vol. This stuff was just too cheap.
There is some name volatility starting to go up a little bit now, which I think is, which is at least healthy. Something's kind of moving a little bit, but it's time for the vol to go up when the market starts to move down. I mean, that's kind of the bottom line. And I don't think we're necessarily done seeing it either. I'm not actually. I have nothing on in the vol products right now. Zippo. I closed some stinky stuff I forgot to close on Thursday today. But other than that, I got nothing in the vol products. So I am wait and see mode for those things right now.
Well, there is some other activity going on the old street today. I was jokingly referring to it earlier as the $1 billion day because we saw two relatively interesting $1 billion deals going up today. We saw Microsoft coming into the mix, into the patent wars that we've been discussing quite a bit here on the show, and gobbling up roughly 800 AOL patents for about $1 billion. And apparently the discount rate on patents is you buy them for about 1/10 of what they actually are enforceable for on the open market. So these are apparently $10 billion worth of enforceable patents that they are scooping up here, and good old Microsoft down about 1.5% on the day to 31.10. But the big winner on that side on that deal was AOL. They picked up $1 billion, and apparently that's a life-altering event for that company because we know they've been on life support for a while here, and they were up 43% today, or 8 handles to 26.40 off the news. So apparently a good trade for AOL there because they don't have the money to enforce these things anyway, so might as well kick some cash off your books on the open market for them and actually make some money at AOL for a change, because God knows no one's getting those CDs at the supermarket anymore to subscribe to AOL.
Well, my great grandma, she still uses AOL, so they got to be doing something right?
Yeah, AOL definitely attracts let's say a unique clientele these days. I've almost toyed with the idea over at Options Insider of just banning people from signing up for our newsletters and things who have AOL email addresses, because the amount of questions and queries and complaints and issues that arrive from anything on the site is orders of magnitude higher with an AOL.com address than anything else. If I looked at the number of customer questions and queries and complaints and things that we receive on a regular basis, orders of magnitude, 98%, I would say, come from AOL addresses. So interesting. I've toyed with the idea of just saying, hey, if you don't have an email address from the past 10 plus years, then perhaps you can't play on our site. But I haven't taken that draconian step yet, but I've been tempted to a number of times whenever I see those AOL.com issues popping up, and they are...
That doubled the market cap.
Yeah, I know.
Basically,
it's insane.
AOL.
It's insane.
Now they got. Well, at least they got the money. What are they going to do with it?
Yeah, that's the question. They have essentially a bunch of. They've actually and maybe we can save some of this, I guess, for the odd block because we're going to talk about AOL there too. But they've actually become a content company pretty much these days and acquired a lot of interesting destinations online. They probably most famously acquired the Huffington Post recently for a substantial amount of money. Yeah, they also acquired some big blogs like Engadget a while ago, which is a big gadget tech site, and a bunch of others have kind of come under the AOL banner of like, I think it seems to be similar to the Yahoo strategy of becoming a content destination as opposed to some other.
Yeah, like who bought CNET? Was that AOL or was that?
That was Yahoo? CBS, actually. CBS
Okay.
owns them. They are now the arm of CBS Interactive. So a lot of people getting into the content game. Apparently, that's where the money. Some people have told me that's where the money is. I don't know. I wouldn't know how to run a content business myself. But
that was actually a decent little fade, that AOL thing. Actually, one of our option pit clients was asking about, how to fade that whole move. Actually, we did. We sold. What do we want to do? We sold the 27.29, I think, call spread. I think was it May.
Save your
Actually,
juice.
might have been April.
Save your juice. We'll get into it in the odd block momentarily.
Yeah.
One more $1 billion deal before we close out the trading block, and that was Facebook. Apparently, apps are the du jour thing to buy these days because they gobble up Instagram, which is the well-known iOS photo sharing app / website / destination, whatever you want to call it, for $1 billion for that one as well. This is on the heels of, I forgot who it was, Zynga acquiring the other app for, I think, what was it, $200 million a couple of weeks ago. So a lot of apps are the things to acquire. Apparently we need to launch the Options Insider mobile app so we can get in on this as well.
Get on it.
It actually is in the works. We're just, our dev resources are tied up doing a lot of fun website stuff now. But don't worry, the mobile is coming. But yeah, then we can get in on the $1 billion days here and collect some cash on that front. So yeah, a lot of interesting deals going up. Facebook slinging its cash before it even has an IPO just goes to show how moot their IPO is. They've been trading on the secondary market for so long now that the notion of them even needing an IPO is kind of silly. But c'est la vie, we've been down that road already. Facebook gobbling up Instagram. All right, that is going to do it for the old trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. As that funky theme suggests, this is the portion of the show where we dive into some of the interesting and or intriguing and or dubious options activity that we're seeing lighting up the tape. And as we discussed on the old trading block, AOL was certainly lighting up the tape today, closing up 43% or roughly 8 handles to 26.40 on the day. And as you could imagine, a lot of folks were piling into AOL from an options perspective. This is the name that does usually under 1,000 contracts a day. So AOL far off the heights of the late 90s when it was listed on the SIBO and people were actually physically fighting to get spots in that pit because it was so juicy.
Oh, yeah. I was that pit started right next to me in a little tiny sliver of a pit.
I remember it was AOL and Dell were some of the first entrants into the multiple listing fray, and people were physically fighting each other to get into those pits and sleeping over on the floor of the SIBO.
Get me into those pits.
Exactly. And AOL was quite the place to be for a while. Probably like 100 guys out there. It seems laughable. It seems laughable now doing under 1,000 contracts a day, but this one was a beast back in the day. Then Time Warner decided to put an end to all of that. But anyway, enough of the history lesson. This one
ruin the internet bubble.
Exactly. This one does under 1,000 contracts a day. Usually did about 45,000 contracts today. So interesting activity going up here in AOL. And the fun thing about this fact that it gapped up so high is that all this trading is opening on strikes that have literally 0 open interest, 2 open interest, 10 contracts open interest. We saw about 3,000 of the April 25 puts starting off on the day here. Mixed volume, a lot of those going up in the probably 30 to 70 cent range because there's a wide range on those contracts. As you can imagine today, with an open interest of 0 going into today, we saw about 2,000 of the April 26 calls going up today with an open interest of 10. Mostly buys on that. The 827s went up about 3,200. A good chunk of those. Actually, those were actually mixed. We saw some sellers coming in and hitting these as well. Open interest of 2 on those. Those 827s were trading in the 30 to 60 cent range. We saw vol get crushed on this strike, though, indicating that there was a selling bias or a short premium bias towards the end of the day here on this strike.
Smack food. Those things are like $1.10. I remember we were just looking at them at the time. Keep going. Keep rolling through your thing. But yeah,
oh no, by all means.
Up there.
Yeah, they were up there, and then they got kind of slapped towards the end of the day. Once the move started settling down a little bit, the buyers turned into sellers on that strike. But some of the more interesting, I think, activity going up in AOL today was actually on the short side. In terms of the short bearish outlook side, we actually saw a lot of put buyers flocking into AOL today. About 5,000 of the May 22 puts went up this afternoon on open interest of a whopping 0. This was a lot of those buys, including about 1,500 going up on intermarket sweeps for about 30 cents. A lot of those, actually about 3,800, almost 4,000 of those went up for 30 cents on the day. So that was the price du jour on the May 22 puts. Also saw about 2,200 of the July 20 put going up for about 30 to 35 cents. The bulk of those being purchases as well. And then rolling out to Jan, we saw about 2,600 of the Jan 2013 22 puts going up as well. So a lot of put buyers coming in towards the end of the day and specking on some downside, coming to bear here in AOL. Apparently they're thinking that this initial pop is a bit overdone. So that kind of surprised me. Usually in a day like this, you see everyone scrambling to get ahead of it and pick up some calls and, ride the long deltas and using the options as a surrogate for the stock because the stock is moving so fast and trying to pick up long deltas that way. And then we saw people starting to come in and fade the move towards the end of the day once it had settled down a wee bit. Is that what you saw as well? You said you were working some put spreads in here earlier in the day, right, Andrew?
Well, trying to actually, we had it on the pit report, and we were looking at it, and one of our clients I just want to fade this thing. What's the best way? So at the time, I think these 827s were trading about $1 and change. So we thought selling the 27.29 call spread, I think you could have sold it for 75 cents pretty easily. Now it's offered lower. So I thought it was kind of hard to buy the puts, but we thought just right around there was a pretty decent risk reward for that thing, and they got smacked.
So of course this 5,000 lot of May 22 puts, that was your client, really. That seems like option pit size.
I would have bought the May 22 puts again. Like, people just buy these things, and they're not. You'd rather probably buy like the May 26, 21 put spread or something like that. If for work into that, maybe for $1.10 or $1.15. You're missing a lot of the downward journey when you buy those. Those pricey 22 puts.
Well, that's the old adage coming to bear again in the options market. People come in, they flock to the cheap stuff, they flock to the OTM stuff that has no bang for the buck, no Greeks, doesn't perform very well, is hyperinflated because 5,000 of these things went up today, so that strike is bit off the charts. And they're following the lemmings in to buy these things instead of doing exactly what you said, putting on a little bit more nuanced position. Maybe you said you buy some in the money stuff and you sell some strikes closer to where you're looking that are so inflated, and you get so much more juice. It's a little more expensive, obviously, but from a performance characteristic perspective, it's a far more appealing style of trading, I would think.
That's what I think. But if you want a little short delta, you might as well have one that actually works when the stock goes down. That's just me.
Yeah, these were obviously the option du jour today here in AOL. Yes. These May 22.
Maybe it's that same guy that wrote the DHI pick.
Or the guy, the red hat. That guy was a winner as well. Probably someone flocking. Probably some newsletter came out and said, "Hey, buy these ridiculous puts," which is why we saw so many of them going up in that 30-cent range. That usually indicates that someone is out there working a price level on these things. And people, of course, not being cognizant of vol or anything like that, are just working 30-cent bids. They don't care where they are actually filled. And the market maker's probably leaning all over them all day and doing pretty well in the process.
So they're the ones buying all the other
Yeah, exactly. They're the ones lighting up all the other strikes around it, all of which 18 open interest, 11 open interest. I love this. It just cracks me up from seeing AOL having fallen to such lows and now leaping to such heights again.
Yes, remember that open interest question for the end toward the end of the show, because I believe we'll be able to dovetail that back into the fallacies and myths of open interest.
Yes. Open interest is a fun discussion in and of itself. But as Andrew said, we will get there soon enough. But before we get there, we're going to dive into the world of for-profit prisons, something Andrew is very familiar with. And we're going to Corrections Corp of America, ticker symbol CXW. This is another one that typically lights up the tape with about 400 contracts a day, doing a whopping $12,000 today. This is the name that closed at about $28.73, down about 26 cents on the day. And this is the name, like we said, that does a lot, or I should say not much volume at all, and yet someone came into play today in CXW, starting off with the June 30 calls. We saw about 1,500 of those being purchased for in range of the $1.10, $1.15 range today. This is an open interest of about 2,200 on this strike. So it could be someone had a spread position that they are rolling up, perhaps, but they're doing it for more size if they are indeed rolling up strikes, because they picked up 5,000 of these June 35 calls, one strike higher, for including a massive block purchase of 4,200 for about 20 cents. This is a strike that has about 42 contracts open interest here. So this is all opening paper. We also saw about 4,500 of the SEP 30s going up, and this is where it gets a little more interesting, because you saw about 600 getting gobbled up for about $1.55. We saw about 2,800 going up for about $1.60, with a good chunk of those being spread or being look like they're purchases, but one massive block of 1,800 did go up exactly mid-market on the day, so it could be possible that someone executed a bit of a spread against maybe these June 35s, but overall, the net activity on the SEP 30s today was buying, as we look at the vol just through the roof on that strike. So interesting activity going on. A lot of essentially could be some spreads hidden in there, or some rolling hidden in there, but for the most part, it looks like people gobbling up some size upside here in CXW. I didn't have a chance to look up any underlying that may have gone with that, so we couldn't see if these were tied or if they were done delta neutral. Doesn't appear to be the case, but we don't have that for sure. So it is possible that someone did these delta neutral. But it looks like on the surface of it here, it appears that this is some straight up opening upside paper here on these positions. Of course, it is worth noting that there is some about 3,000 contracts open interest on both the SEP 30s and the SEP 35s out there in September as well. So someone has been playing in these strikes previously as well. So interesting stuff going on here in CXW. We'll have to go through our tape when we have a little more time later this week maybe and see exactly what was going on that SEP 30 and 35 strike leading up into that. That's usually a bit of a time-consuming process, finding exactly where and when those trades went up. But interesting stuff going on. Andrew, Mike, or John, any of you guys watch the for-profit prison sector at all? John, I'm scared to ask you about that one.
No, I didn't even know it existed. I'm kind of intrigued here by the fact that there's a private company out there that's working the prison system. I'm surprised we don't have more retail clients calling in about it. But yeah, I mean, there's a lot of activity on those certain strikes and nothing much else throughout any of the chains. I was just jumping through the months, but definitely have to keep this one on my radar as didn't know it even existed as of about an hour ago. So is this one you watch a lot or no?
I trade prison quite a bit. Yes, I'm a big fan of corrections. No, actually, this is one. There are a lot of these companies floating around. I don't watch this one in particular, but I'm trying to see here if I can find some fundamentals on this one for you. It seems to be hard to find. The
customers aren't calling in a lot. They only get one call. Come on.
So if someone who's locked up in one of these prisons, is he an insider? Does he have inside information on the company? I mean, how does that work?
This warden is useless. Sold CXW.
Yeah. This place is falling apart. The food is horrible. So drafty in here.
There were 4 shankings today. Watch out.
Right? Right? Yeah, prison guard just got murdered. Buy some puts, honey. I'll definitely have to start watching this one. It doesn't look like it actually even moves that much. I was looking at the 52-week high with 30 and low is 18, so it's just right in the middle.
Yeah, all I'm seeing here is that they founded the private corrections management industry more than 25 years ago, establishing industry standards for future-focused, forward-thinking correctional solutions. And they have a commitment to innovation in the prison sector, apparently. So they make the best mac and cheese of all the prisons.
So, yeah, every big company likes to talk about how innovation is key to their business. Like, what do you think is like an innovative idea in the world of privatized corrections?
They make those really cool holographic license plate stickers that you put on the sticker right there. That's how they've adapted the old stamping license plates.
I think they just try to make them come back all the time so they have repeat customers. They never really want to be empty, right?
Yeah, they don't try to rehabilitate them.
Their goal is the opposite of other jails.
So they have
state-run jail. They want to be empty.
Subliminal music that says, really, robbing's the only chance you got to have any money in your life. So, when you get out, first thing you want to do is get a gun.
Theft is good.
Go rob people.
Yeah, this thing has about 100 million shares outstanding with a market cap of nearly $3 billion and institutional ownership of about 88%, and not much short interest, only about 2% or so. So interesting stats here from the prison sector. So perhaps some of your clients were getting long prison premium while you weren't looking today, Andrew.
It could be a good hedge too, right?
Is that a good hedge versus the Apple, right?
Long Apple, short prisons. How's the ratio work out on that one? 1 by 3.7?
Or maybe long Apple, long prisons.
Yeah, then you're getting both segments of society. Yeah, you're getting the wealthy hipsters with Apple and the San Fran crowd, and then you're getting the dregs of society with the prison. So you're getting both eggs, both sides pretty well.
I thought that's why we play the lottery.
All right. Now that we've offended both prison inmates and Apple hipsters, we're going to close out the old odd block and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Express Block. This is, of course, the portion of the show where one John Grigus recovers from the wedding long enough to tell us what is going down in the world of Options Express/Schwab. Mr. G, what has caught your attention today, sir? I believe, if my birdie network is correct, then there are some rumors of perhaps a 1/10 Apple size option. Is that correct, sir?
Yeah, I think when we were talking Saturday night, the wife said, explicitly, don't talk about work. So after about 5 minutes of silence, Mark and I started talking about work.
Yeah, I did feel bad for all of the wives at that table. It was a very one-sided conversation for the most part.
So over vodka and tonics, I think that's Mark's tasty beverage of choice.
Kettle One and tonics, please.
That's at least the orders he barked at me when I was walking to the bar. But but I did mention to him that we got a late memo on Thursday from NYSE ARCA, and I thought I'd share it with you because I thought it was quite interesting. And in this day and age, for profit exchanges are always trying to come out with the new VIX product, to kind of capitalize on order flow. And we had some unsuccessful ones. I know we had binary options on individual equities about 2 years ago, and those kind of fizzled out. The SPX and VIX binaries at Options Express, we're hanging on to here. We finally wrapped that up about last month, so we don't offer those anymore as well. It looks like the exchanges are coming up with a mini here for high-priced equity options and indexes. So kind of recap it here. I'll give you the summary. It says the NYSE ARCA options is taking the concept of listing and trading parallel options products of reduced value and size on the same underlying security as are listed on key indices, applying it to other high-price underlying securities. High-price underlying securities may have relatively expensive options, and even a small percentage move in the share price can mean a large movement in the value of the option in terms of absolute dollars. Oh, is that how leverage works? Apparently, that's the way it does work. So issues are selected that are priced greater than $100 and are among the most actively traded issues with an average daily volume of at least 45,000 contracts over the previous 3 calendar months. So, surprise, surprise, the one on top of both the ICE and the NYSE ARCA happens to be Apple. The other 3 that they both are looking at were Amazon, Google, and GLD. ICE had a couple extra ones, including looked like the Priceline and IBM, and the NYSE also included the SPY.
Mini GLD, how much of a big FU to the futures world is that? GLD is already 1/10, and they're going to cut it down by 10 again. It's like saying no one wants to touch the full
the SPX.
Yeah, you're right. So I mean, no one wants to touch these full-size contracts anymore. Everyone wants these little bite-size. You have to keep going 1/100th the size of the futures in order to make the contract palatable to apparently to retail these days. I don't know. Interesting.
Yeah, I mean, I could definitely see that Apple's going to have some traction in Google. But, a lot of questions get raised. Are they cross-marginable? And I'm sure day one when these do get offered, we'll have questions on commissions. And I think Mark and I were talking about this Saturday that, yes, of course, we're not going to cut the commissions down by 1/10. I mean, the exchanges will still get their cut and commissions will remain the same. But there were 2 different foods for thought that the ICE and NYSE were trying to figure out how they would represent these in the marketplace. And I believe the ICE, according to their memo, was proposing a symbol change, that they'd have a moniker on there to signify a mini option per their filing. The NYSE also had an idea that they would keep the multiplier at 100, but they would change the strike prices to reflect the mini contract. So I thought maybe I'd get the panel's thoughts. Would they go the ICE way and reduce the multiplier to 10 and change the symbol, or go the NYSE ARCA route and keep the multiplier at 100 but reduce the strike prices? What are your thoughts?
I think the multiplier sounds nice, but I think for the people this is aimed at, which is that kind of retail segment that finds these large products a little bit unwieldy, a little bit too much for them to bite off and chew, I think you probably have to change the strike price as well, so they know exactly what the heck they're getting. If you see something trading the same price as Apple, but instead it has just a 10 multiplier, I can imagine, at least, I mean, for you guys on the brokerage desk, it's probably going to be a lot of questions coming in around expiration times. What the hell is this? What is this 10x thing I'm getting here, or this 10 multiplier thing coming in on my sheets? I thought I was trading pure Apple, or not knowing. That's a little bit more nuanced, I think, of an argument, whereas the strike price is obvious there at that point what you're trading. It's kind of hard to get around that one. So I kind of
agree with you. I like the change in strike prices so it stands out. I mean, daily we get, I bought the wrong weeklies. I meant to buy the week 2s. I bought the week 1s. Just go ahead and cancel that trade. Oh, let me guess, it's a loser. Oh, it is. Yes, you can't cancel the trade, and then the heated discussion ensues. So yeah, as much as they could differentiate it from the standard multiplier 100, I'd rather them do that.
I'm just thinking of you and the boys on the desk, John. When I say that,
appreciate
that
it,
was all for you. But look at GLD. GLD, they didn't do some funky multiplier. They just cut it by 10, and people seem to be able to wrap their heads around that. So, and it hasn't hurt their volume any.
For what it's worth, I think that makes the most sense. When you look at the futures world and why they've had issues on not being able to standardize a retail online option platform, I think it all has to do with the multipliers being different. The standardization of 100 shares per contract is what I think has helped the equity options world and its robustness, so to speak. I think changing the multiplier might screw people up.
There we go. Yeah, a dissenting opinion.
Every contract in the futures options world, I mean, that's really why we get a lot of people that are hesitant to get into it, especially when you get into like the softs. I have to look those up, or even energies. How many barrels in heating oil, how many gallons in RBOB. It's all over the place. And Mike does have a good point, but hopefully that just a reduction from 100 to 10 won't be too hard for them to wrap their minds around.
So Andrew, let's wrap up the voting here. Andrew, where do you fall on this contentious point?
I think too confusing. They're gonna make it a little. They're making it too tough there. I don't think it's also a commission generator. I don't making why. Why is my question? Asking why.
I think Grigus cooked this one up to keep the commission machine flowing.
Yeah, we love it over here. I mean, you can't afford to buy 3 big apples, so you can buy 9 of these small ones, and then when you have a 27 Delta and the stock moves $5, you can call and complain that these things are rigged. That's always my comment, is when they say these things aren't moving the way they're supposed to. I go, then go make the market, or go switch sides, or go down there and tighten it up. I mean, it's that whole mentality of there's a guy on the floor that's screwing people over. It just doesn't exist anymore. But
you must be really popular on the phones. Go down to the floor and fix it yourself. If, you don't like it.
No, I don't say those words.
Tough bananas, sir.
I imply it in a way that they're not. They think of it themselves, and they're like, I should just go down the floor and do this. Like, oh yeah, that's a great idea. What's a seed go for these days?
Yep, everyday winner.
I think it comes in. I think it comes in a Cracker Jack box now at this point.
But this will be interesting to see how these play out, and whether they take hold. I know a year ago we had those linked, like long Google short SPY options that were created by NASDAQ.
Yeah, that was NASDAQ, an interesting product that had no muscle behind it whatsoever and completely fell off the radar, even though given the love that both Apple and S&P have had over the past year, and trading those two against each other is a very popular trade. That product should have printed money, and yet NASDAQ completely dropped the ball with. I've even brought that up to their options head over there, their CEO, both of those exchanges, and said, hey, you guys have a great product here, and you're completely dropping the ball with it, and didn't do anything. They didn't really put any muscle behind it whatsoever. So we'll see. I guess that's the end. At the end of the day, as interesting as a lot of these products are.
Market that product.
Yeah, they didn't. We even had them on the show.
That were marketing that
yeah, we had, I believe it was Paul.
Yeah.
We had them on the show to try to help them promote the product, and no dice whatsoever.
I thought they were pretty cool.
They're a great product, and that's the problem.
Well,
guys like us think it's a great product, but if you don't get it out there to the masses or to the institutional desks or any one of the people who actually can make these things a success, it's all moot. It's like John said, the binary options. Those were a great idea. Amex had this great idea to create this product that would move liquidity back towards the at-the-money strikes and away from these garbage options like the May 20 puts we were just talking about there in what was it, AOL, I believe. So that's what things like binary options were created to fix, and yet they fell off the radar as well because they had no budget. So it's an interesting. Many products come out that are theoretically intriguing, whether they actually have legs. Of course, given the fact that this has Apple in it and it allows you to trade more Apple, I think it might actually be successful. It lets you trade more Apple.
Right. I thought the idea of Apple and then outperforming the market, you get the extra kick. Not only does it go up, but you get the outperformance kick. You could sell puts on that thing till your head caved in, because. But I don't know. That's just.
Yeah, I guess the notion of selling one put at a time isn't too intriguing to the vast majority of the audience out there. They want to sell 10, baby. If you can't sell a 10 lot,
right.
don't even bother. Don't even bother me. All right. That is going to do it for the old Xpress Block. And now, because we've been remiss in letting you guys participate on the old show, we're going to dive right into our listener questions block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, and first up here on the old listener questions block, we have a question that was posted in our forum over at theoptionsinsider.com by someone who goes by the handle Stock Surfer. And he asks about open interest here. He says, I am entering the world of trading weekly options. With monthly options, I have been told to make sure there is at least 100 open interest when I consider buying an option. I'm noticing some of the weeklies I'm considering don't have that much open interest, even though they perform well in my back testing. My question is, if there is little or no open interest, is there a chance I will not be able to sell my option even at the bid price? Thank you in advance for your time. Well, I guess we've reached an interesting point in the old options market where even the retail is wondering if they can get executed on the NBBO. That's probably a yeah, I know, a very damning question in and of itself. But Stock Surfer, Stock Surfer, I think you're pretty safe if you're hitting bids for the most part. Obviously, we don't know what kind of size you're trading or anything like that, but given the fact that the vast majority of retail customers are sub 50 up, and that usually should be covered by most of the bids out there, I would say your chances of being filled, hitting the bid, should be relatively good. Now, granted, if there's a one lot in the book and you're trying to sell a ton on that one lot, you may not get all of those contracts off. But I'd say your chances are fairly good. But that being said, it is worthwhile considering the open interest when you're going into these positions. We talk about this a lot on the Odd Block. We see people coming into these names that trade 100 contracts a day and putting on 5,000 lot spreads and things like that. And we always joke they're going to be trading with themselves to get out of this because, or shopping it around upstairs for a long time to find a counterparty because there's no one else playing in those names. And that's what you're looking for when you're looking at the open interest numbers, to see who else is out there and active and provide a fluid liquid market for you when you want to close that position out. But that being said, that should be reflected in the bids and offers of the name too. If they're relatively tight and there's some size on them, any size or if there's some size, at least enough to do a 10 or 20 or 30 lot out there, I would imagine that would cover the needs of most of our audience. John, what do you have to say about this, since you are executing people all day long?
Yeah, I got to say,
not in the Texas sense, by the way.
If there's a tight bid offer, we do get this question a lot. Will I be able to get out in the late afternoon of expiration? And absolutely you will. If there's a market in midweek, if you've watched it and there's a market, you'll be able to get out. One of the things that we do see, particularly on the SPY, is that when the underlying stops trading at 3 o'clock Central, you will see those options widen out, and you'll have a hard time getting intrinsic value. No market maker wants to make a market for parity, with 10 minutes to go in the close on that expiration. So that's one I would watch out for. Our risk department will close a lot of SPY, people that are in assignment or exercise risk, right before 3 o'clock, and the customers actually think we're punishing them because they have 15 more minutes, but we're actually trying to get out before the liquidity just disappears and the spreads go wide. If you need to get out in this last 15 minutes and the underlying stop trading in the SPY, they're going to make you pay for it. But other than that, if there's relatively good liquidity, you'll be able to get out pretty much at any time.
Yeah, so moral of the story, unless you're trading 100 plus up on some of these very illiquid weeklies, I think your chances are, if you're executing on the NBBO, your chances are pretty good. If you're going with these guys who's working mid-market, which a lot of people are trying to be savvy, if they think that's savvy, they're going to come in, they see 150 at 165 or whatever, I'm going to work, at mid-market somewhere, and then you're going to have to wait for a while and try to get it filled some other ways, and then you probably will have a harder time getting filled on some of these less liquid names with no open interest.
But a weekly, don't forget, a lot of them just got listed. So there's no open interest because it got listed this morning, and now it's 3 hours later. And
yeah,
there's
that's
only
true.
Like 3 contracts traded.
If you're looking for 5,000 OI on the day it gets on Thursday morning, you're probably looking at the wrong place.
I think you want to definitely define.
Everything is I think everything is relative to the size you want to do. So if there isn't the standing bid offer for size when you put your order in, it probably won't be there when you want to get out. So if you're trying to sell 100 lot and you see 200 or 300 up on the get-go, you probably got a good shot. And if it's not, if you don't see the 5,000 up when you try to get in the first time, it probably is not going to be there on the way out as well. But a 5 or 10 lot, you can get out on 5 or 10 lot.
I think the purpose of what you're trading the weekly for is just as important as well. I'm guessing the person that asked this question isn't selling cash secured puts and has priced the option to say, I'm good with owning the stock at this set price. And if that's the case, it shouldn't matter what the open interest is. If it's 50 bid at 70 and you sell it at 50 with the intention, if the put goes in the money, you're going to take assignment and sell calls against it, whatever, then who cares about the open interest? If you're trading, not investing, if you're, trading naked puts or put spreads or call spreads, iron condors, calendars, whatever it is, I couldn't agree more with what Andrew said. You got to know there's going to be some pain if you need to get out in a trading situation. If there's no open interest and the bid ask is 50 up, trying to do anything over half of the bid ask. If there's 50 on the bid, 50 on the offer, and you're doing more than 25, you're going to feel some pain if you need to get out.
Yeah, open interest definitely becomes more of a factor when you're doing multi-leg spreads and things like that. That's when you're looking at trying to get things off and on the bids, and you're still not being filled, and there's a lot of other issues that go into that as well, obviously. But if you're just coming in looking to trade options on the bids and offers, then I think you're probably going to be okay in most scenarios. The markets haven't fragmented that badly yet, where a 10-up guy can't come in and get his business done on the NBBO. All right. That's going to do it for the listener mailbag, and now we're going to dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what we're watching for the coming trading sessions, and we'll kick things off with you, Mr. Lobster, a.k.a. Mr. Maine. What are you watching for the next few sessions?
I'm a little interested to see if the volatility can actually expand a little more. There was a lot of edge. There was more edge in the vol products two weeks ago than there is right now, even with the cash numbers higher. So I'm curious to see if those fat premiums can come back. And I still think there's a lot of relatively cheap individual equity option volatility out there. So, I mean, those are basically all I'm looking for. I'm trying to keep things as delta neutral as possible until the bull we had for 2 or 3 weeks comes back. And right now he's hibernating. No, the bull, he doesn't hibernate. What does he do? He sits in his pen in the
he goes out to stud arena for a while until it's time to come back for business.
Yes, Fernando the bull. He's under the tree sniffing the petunias, and that's where he is right now, I think. We'll see. Let's see if we can bring him back into the ring.
All right, Andrew, thank you for that. And Mr. Lobster, what is coming up in the land of the pit that may interest or intrigue our listeners?
2 things. We are upgrading our website to deliver more timely information to our clients. Also along the lines of more like open chat forums where we can answer questions. To try to be more of a resource for our clients in a real-time basis, since that's what they want. So that's what we're trying to do. And as well, the Mark extravaganza in more winning trades. Yep, we're putting more of those out as usual. But also to June, we are having a big extravaganza as well. So get to meet Mark, myself in Chicago, see the Cubs, and we will be doing a trading seminar. So that information will be coming out more and more. I think it's the June 14th, 15th, right around there. So that info will be coming out.
And of course, don't forget the sex.
Thank you, sir.
You're welcome. Don't forget the sexy calendar of Mark and Andrew available on optionpit.com very soon.
Exactly. Flinging trades.
All right. Thank you for that, sir.
See you later.
You have a good one. All right, and next up in the old Around the Block, we have, of course, Mr. FHM himself, and not talking ladies fashion. We're talking federal holidays. Mr. Mike, what are you watching around the block? What are some of your Wheel of Fun, a.k.a. triple income strategies that candidates, I should say, that you are eyeballing these days?
The ones we've been eyeballing, like Andrew said, we're looking for a little vol to come back. The candidates we've been looking at have been primarily blue chips that paid a solid dividend, 2 to 3%. The most recent stock we were looking at was Exelon. I can't remember the strikes. I don't have it in front of me, but selling the April puts to get assigned, the April at the monies, hopefully get assigned, collect the dividend, and then sell the next month after the ex-div date. Exelon is the most recent candidate. Other than that, looking forward to seeing our friends from the Option Insider down in New Orleans the first weekend in May at the Options Industry Conference. I'm super excited to be involved in a panel with Mr. Longo from the Options Insider. It should be a good time.
Should be fun for all.
Fun for all, definitely. And now I have a new interest in the prison management company. I'm gonna keep my eye on it.
I'm telling you, there's that business is not going away anytime soon. We're not shutting down any prisons or clearing the decks in the prisons anytime soon. So perhaps there is some gold in them thar hills, as they like to say. And by the way, I have to stick up my 2 cents for the Wheel of Fun. Far more exciting than the triple income strategy.
Same strategy, different name.
Exactly. So, because I'm trying to, where is the triple of the income? I see selling the put, I see selling the call. Oh, the other income is the appreciation of the underlying. Is that what you're thinking?
Well, the dividend. That selling the put, once you're in the stock, collecting the dividend, and then the call itself.
Oh, these are all dividend yield names too?
Yeah, that's what. If it's not, we'll take in a juicier premium. It's just right now with the VIX where it is, we have to be pretty selective. There's a bunch of stocks that are, IPOs where the vol tends to be a little higher, or a higher beta stock where they're moving around and it just doesn't seem like you're getting paid for the risk. So we've been looking more at the dividend yielders.
That clarifies. I've always wondered where the third income lay in the triple income strategy, and now we know, listeners, the mystery has been solved. Thank you for that.
Mystery has been solved.
Thank you for that, Mr. FHM. And of course, last but not least, we have Mr. Grigus from the land of OX. And what are you watching, Mr. G, aside from mini Apple weekly binary options?
Yeah, those are going to be on my radar, as well as CXW. But it looks like an earnings week, so we'll be looking at Alcoa for tomorrow. Big Google on Thursday, I believe.
Yeah, they're on the 12th, yes.
And we got some banks that look like that are coming in on Friday to round out the week, JP Morgan and Wells Fargo. So the earnings will be at the top of our list. We get a lot of people, a lot of clients that like to play the earnings releases. We're going to have an update to the website kind of featuring that in a few quarters. I know our innovation team is working on something they gave me a sneak peek at last week. From economic figures, with the jobs number fairly weak or lower than expected last Friday, we'll probably keep an eye on initial claims on 7:30 on Thursday. The week then is rounded out with the PPI and CPI on Thursday and Friday as well. So it's a holiday week. A lot of people, a lot of traders seem to be off with their kids on spring break. But with earnings and some decent economic numbers, it should be an interesting week.
Yeah, good old Alcoa. I forgot Alcoa is this week again, so they kick it off, and once where Alcoa goes, usually means we have some fun stuff to talk about in the trading block and in the odd block for the next few weeks at least. So that should be fun to have some earnings to kick around on the old show. And since everyone else already did their plugs in the around the block segment, Mr. Grigus, what is coming up in OX land that may intrigue our listeners? I bet you have some live events coming up pretty soon.
Yeah, the director of education shot me an email last week, and he's like, hey, spread the word about the two upcoming events that we have planned. We do have a big presence of customers in the Chicagoland area, so if you can't find it on the website because they have not put it up there yet, I'll be the bullhorn for you, for the education team here. On Saturday, April 14th, I mentioned this last Monday, but just as a reminder, the Hyatt Lodge at McDonald's right there in downtown Oak Brook. Our crack staff of Jim Ruzon and Joe Cusick, and I believe Nina's going to be there. We'll be giving a free presentation. Just contact the trade desk or customer service and we can get you all the information you need. Further into April, on the 21st, we're going to be in dreary Cleveland, Ohio. Never been there, so I really can't comment on how bad it is. But
we're just spreading love left and right on this show today.
No, but for you Clevelanders, get on out to the Crown Plaza on the 21st. Again, that is free. The same crew will be out there. They'll be going, everything about options, using the platform, building a strategy and through the Xpress method. A big Q&A at the end. Any questions you have on options, these guys are pros, and we'll definitely be able to answer those questions. We have some other ones down the road out west. I'll save those for next week as we get closer to those dates.
We need to get on the old Option Block Roadshow again too, and do some more live events. Those were fun.
Yeah,
the one we did last year was really fun. We need to get some more of those on the docket. So maybe we'll start planning some of those over here, and maybe we'll let you boys at OX know when we actually want to plan them, and we'll let you know when we're having them, so you guys can show up. All right,
sounds good.
That is going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. We, of course, want to thank all of our listeners out there for downloading and streaming and subscribing to the program and making it such a success. And we want to remind you guys as well that many of you have asked, and now this program, as well as all the rest of the programs on the old Options Insider Radio Network, are available on Stitcher, the old Stitcher media network there. So you can find it on Stitcher.com. You can stream them from there. Many of you will also like to download the Stitcher mobile apps to your smartphones. You can find us on those as well. So yet another way that you can interact with and listen to and enjoy the old Options Insider Radio Network. We, of course, encourage you to follow in the footsteps of our friend Stock Surfer here and many others who've written into the show and post on our forums, send us Twitter questions and Facebook questions, and you can even call us on our voicemail, which is 312-544-9356. We have many, many ways to get in touch with us. You can even call Mr. John Grigus on his personal cell phone, and he will happily take your questions for the show anytime, day or night. I know his wife is particularly enthused by that last one. All right. That's going to do it for the show, and we'll see you all on Friday.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.